Welcome back to the channel, everybody. I am Mick Alphanim. Please subscribe to the channel if you haven't already. I would greatly appreciate that. And if you could, please click that like button, turn it into a rocket, and send it into the stratosphere. So we're on stellar.org/blog right now. Stellar has been making some major moves as of late. And I love this company. They're always doing something good. And that's good for us as investors to know that a company has the fire, ambition, and will to continue to innovate, because that's going to make us a lot of money as holders of those coins, or if you will, investors. So now we're on the SDF blog, and it is titled Introducing Automated Market Makers on Stellar. This is huge. We must, before I read the article, let me say this, and it's pertaining to this subject, okay? We must stay ahead of the competition. We must stay ahead of anything else governments might develop that could offset the balance of how the protocols could be used and our leverage as the absolute best protocol on the market. I say our because I hold it. I'm just inclusive like that. But as the absolute best product for companies and banks to use, because that's going to bring them to us. If we can keep the gap separated between what the competition is doing and XLM, and they can see that, hey, look, there is nothing even close to the cheapness of XLM, which I'm not sure if I released the video, but XLM is the cheapest moving crypto out of all the banking coins. XRP, XLM, Algorand are the fastest and cheapest ways to move money. And I believe Cello's on that list as well. Lightning fast and super cheap. But XLM, there's nothing close to XLM when it comes to affordability. So to continue to innovate will be better for us in the future, in the long run, as far as more banks wanting to use the best cryptocurrency protocol. And that will make us lots of money. So here, the article is titled, or the blog rather, is titled Introducing Automated Market Makers on Stellar. And it's written by Justin Rice on July the 1st, 2021. Let's begin. So the first paragraph is titled Liquidity, Liquidity, Liquidity. I'm already excited. Stellar connects the world's financial infrastructure by making it easy to issue assets and to use those assets for seamless cross-border and cross-currency payments. Interoperability is what they're talking about here. Market liquidity, which allows quick and efficient exchange of assets at a stable and transparent prices, is fundamental to the network's success. And like many in the ecosystem, SDF has long understood that fact. To quote our 2021 roadmap, improving liquidity, I love this, improving liquidity is an essential part of the 2021 growth plan. The ability to efficiently convert assets is what enables varied use cases and actors to interact with one another on Stellar. Liquid markets require substantial depth. Yes, they do. They definitely do. Measured in the amount of units available to be bought and sold at narrow widths, measured by the spread between buy and sell prices, both of which contribute to minimizing slippage, a measure of price impact or cost for a conversion, creating liquid markets that are both deep and tight on a network like Stellar, which is designed to handle massive international payment flows, is a real challenge. There's a lot of bootstrapping to do. Every asset issued on Stellar starts with zero liquidity. To create and sustain a market, people have to be willing to put capital onto the network and to use that capital to facilitate asset conversion. Currently, there is only one way to do that, creating orders on the order books. But the desire to improve liquidity to make cross-border payments fast and cheap, highly usable led to a proposal to enable the creation of automated market makers, or AMMs, on Stellar. Based on what we've seen on other decentralized networks, AMMs have the potential to help the network continue to thrive and grow by making liquidity provision an accessible, simple, and inclusive process. This is genius, absolutely genius. So making it where a large bevy of individuals can use the AMMs to provide more liquidity, and that the liquidity will only grow from here. Where I thought Stellar was doing pretty good from the outset, they're improving on liquidity, which only makes them more tempting to banks, to governments who want to issue national coins on Stellar, who might want to issue central bank digital currencies around the world. More liquidity makes Stellar that much more tempting for them to use, which is beneficial to both investors in Stellar as well as the people who utilize Stellar in their businesses. All right, because it will become wildly successful. There'll be lots of capital flowing through that increases on liquidity. There's more companies that will see that and want to utilize the Stellar network. Also, that increases the capital being brought in and liquidity. Also, with the investors, they'll see there's money being made. So they're continually buying coins up. OK, so that adds to liquidity on the network. That adds to the price being raised, which is beneficial to the investors. I mean, it's just all around good. And as I said before, all of these innovations that Stellar is making help to keep it the absolute best banking coin possible. The cheapest, it moves the cheapest, all right, as the lowest fees. It moves extremely lightning fast, has an insane amount of security, and now is making a move to become one of, if not in the future, the most liquid asset. Absolutely. This is an absolutely brilliant chess move. I love it. And it only makes me envision even more money being stacked up in my accounts, in my pockets, exploding, boom, exploding with all types of capital. So now let's continue on here. Currently, there is only one way to do that, creating orders on the books. Okay, we already read that. Let's go here with the status quo order books. Since its inception, Stellar has featured a built-in decentralized exchange, or SDEX for short. Protocol-level operations allow users to create orders to buy or sell one Stellar network asset for another. And those orders are aggregated into order books and prioritized for execution based on price. When buy and sell orders cross, the protocol automatically matches them to execute a trade. Path payments, which are Stellar operations that facilitate cross-border payments by combining asset transfer with asset conversion, are also routed through the order books. So currently, they rely on liquid order books to execute. The order book model is tried and true, and it's familiar to anyone who used traditional exchanges to trade Forex or cryptocurrencies. But it also presents some liquidity challenges, and those challenges are magnified by the decentralized nature of the network. In an order book model like the SDEX, liquidity comes from standing orders that users can trade, or in the case of Stellar, make path payments against. The majority of those orders are placed by professional market makers who hold an asset in inventory and quote both a bid, which is the price at which they are willing to buy more of the asset, and ask, which is the price at which they are willing to sell the asset. Their goal is to make a profit on the difference between the two, the bid/ask spread. Because bid/ask spreads in active markets are small, market makers rely on high trading volumes in order to thrive. They also require capital upfront to place orders, and they need to update those orders constantly as prices change. They generally use algorithms and trading bots to make minor adjustments to manage risk. And maintaining those algorithms and bots requires expertise, diligence, and dedicated infrastructure. It's a lot to manage, and it's a fairly complicated process. On Stellar, ledgers close every 5 to 8 seconds, which is fast for a decentralized exchange, but it's still slower than many traditional exchanges. So there's a risk that the price of an underlying asset could change more quickly than a market maker can update their SDEX. Each operation also incurs a network fee, and while per operation fees are incredibly low, they start to add up if you are updating hundreds of thousands of orders every day. So I like this. They're taking a self-notation a self-evaluation, seeing what's wrong, seeing what could be, not what's wrong, but what could be improved on, and being brave enough to improve it, being brave enough to admit, okay, this here might be a problem. This here needs to be sheared up a little bit, cleaned up a little bit, and then being brave enough and intelligent enough to take the time, put in the work to improve the network, to improve the functionality. That is very, very good, and I'm very, very happy with that as an investor. Let's continue on. Market makers weigh these costs and risks against profit potential to decide which asset pairs to support. And generally, they choose pairs that have high trading volumes because those have the highest profit potential. This is a major problem on a lot of other networks. Currently, many key asset pairs on Stellar are attractive enough to garner that support. But as the ecosystem expands, there are a slew of new assets and new markets to bootstrap, each of which present a whole new challenge. So let's go on to AMMs, okay? So we can draw this to some sort of conclusion. If and when validators agree to accept it, Protocol 18 will add automated market maker functionality to Stellar, enabling developers to create AMMs that will coexist alongside the SDEX and provide an alternate source of liquidity. As I said, this is absolutely genius, making sure that if there's any holes in the system, that we close them up now, so that we have the most efficient system. Now, notice how the timeline, they're moving very quickly and doing things very efficiently while moving quickly. But before regulatory clarity is achieved, they're making sure, Stellar Foundation, that XLM is the absolute best protocol for moving any type of currency and doing any type of currency conversion, making sure it's the most secure, making sure it has the most liquidity possible, making sure that it is the most complete protocol. All right. Now, whether they actually achieve that or not is yet to be seen. However, the fact that they're willing to actually go towards that with the fire and ambition that they're doing it with makes me very, very confident and very, very, very excited as an investor. Let's continue on here. Anyone can provide liquidity by depositing into a liquidity pool. On Stellar, it will just take a single operation, and the pool adjusts prices programmatically. So it removes the need to manually update orders to manage risk. So here we have it, that they're making it even simpler for individuals to use, companies to use. And if it's simpler, then more people can utilize it. This reminds me of how NFTs were. In the beginning, in my opinion, a lot of NFT sites were very complicated to use. Then you had a lot of redoing of how NFT sites are run and presented, and it became much simpler for the common people to utilize NFTs like myself. And then it became much easier for us to jump in and sell our own NFTs or alternately to buy NFTs. It reminds me of that. Shearing up the system so it is simpler and it brings in more people to utilize the system, which inevitably brings in more liquidity. Absolutely brilliant. Let's continue on here. Those incentives, along with the relative ease of participation, that's what I just said, have allowed AMMs on other networks to attract large amounts of capital and enable high volumes of trading, effectively crowdsourcing liquidity. Uniswap, for instance, has over $5 billion in total value locked and facilitates billions of dollars worth of Ethereum network transactions every week. AMMs on Stellar have the potential to provide easy to access liquidity at scale, especially for new markets and markets currently overlooked by market makers. So there's another little piece to the puzzle, that they are providing this, and it will close up the gaps between those who are already established and able to do this and those who might be new in the market coming in and seeing the system as too complicated and then turning their backs on it and not utilizing the system. Instead, Stellar is providing an easy access point, so to speak, that brings new people in and makes it very simple for them to implement this system, and that's beneficial to everyone. A rising tide raises all ships. It's that simple. So we're going to stop there for now. If you want to read the rest of the article, like I said, it's at stellar.org/blog/introducing automated market makers on Stellar. All right. And go and check that out. It's a very, very good read. I'm very, very, very excited and happy that they're doing these particular things and making the network even that much more tempting to banks for central bank digital currencies and nations for their stable coins and national currencies. Don't forget about national currencies, okay? Those are big as well. And we're going to make millions and millions of dollars, possibly I'm not a financial advisor. This is not financial advice. So now that you have that information, what are you going to do with it? This type of information is muy linda, mi gente. Just muy linda. Now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, let's get to the money.